Start. May kukunin ka? Kunin mo na. Go ahead. Sorry. Oh, hi. Hi, everyone. It's March 21, 2022. And it's me and Jeff. And let's discuss what just happened in the markets lately. So, Jeff, just a few starters. So, how was your week? It was a very crazy week, but it was ending very well last week. So, how was it for you?
Yeah, it was a wash, honestly, because I stayed short
Mm-hmm.
with calls on like XLF because of the
Uh,
F1C. And
mm-hmm.
I think what happened was there was too many puts. If I relook at the options flow, there's way too many puts at the 4,000 and
Mm-hmm.
4,100 level. So what happened was on OPEX, the market makers had to unwind that
S&P
delta, and then
500.
we rallied. So it'll be interesting to see what happens next week. Because last week
Actually,
definitely it was
right.
too bearish. I think everyone was overly bearish because of the Fed,
Uh,
and then the market never does what you expect it to do, right? So
well, I noticed. I'm not sure if it was just me. I was commenting that every time we were near an options expiry, we usually bottom before it. So January 28th, if you recall, and then February 24,
hmm
despite the invasion of Ukraine on that day, and last week, which was around March 15. So, in some ways, I do believe that it was just a bear market rally, or at the very least, we're still in a buy low, sell high. We're not in a bull market at all. And I do believe what you said, which is we'll see this week. So, obviously, that week could be just a fake out, and a lot of bullishness is not really that much warranted, especially with high inflation still on the rise. Let me just take a look what's happening on oil today, because here in the Philippines, once you go out, the crude oil, well, it started around 55 a year ago, at least 55 pesos. Now it's about 85. That's about a 60% increase for everyone using oil for their cars, which really is predominant in the Philippines. We're not really a electric country at all. How about the oil prices on your end in US? Did you ever go to the pump? Oh,
hmm
right now oil
yeah, I see
apparently
on
is
Twitter,
100
but yeah,
something.
it's hitting highs that we have not seen since um, back in like 2018 when the market was hot. Um, and that normally signals that we should have a lot of issues in the next few quarters because it's demand destruction. But yeah, prices are $6. I mean, it used to be 330 and they went up to like 550. It's crazy how much prices have gone up, and Americans are definitely feeling it. So it's putting a lot of pressure on the U.S. politicians here to really take care of inflation.
Oil in the Philippines has gone up. We're looking at oil prices right now in my chart. We just bounced off at a really good support of $95. And since the last 3 days, it's been moving up from 95 to 107. This triggered a lot of people to start buying NRGU, which pulled back. These are big oil indices. We've
hmm
got oil leverage names like UCO, Ultra Bloomberg crude oil. So most of the crude oil stocks actually rallied for the last 3 days. And it seems as if this commodity bull run is still on its way to uh, undoubtedly higher lows, so higher highs. I just don't know how high will it peak, but definitely, yeah, inflation is a problem. What are the sectors that you are very confident in being bullish about, and what sectors are you quite wary on the rise, if ever? Are you
Yeah, I
bullish?
think
Oh yeah, go answer that.
I think we're gonna just trade sideways, honestly,
Mhm.
to unless some event happens that skews volatility to the downside or the upside. I'm definitely bearish on discretionary, consumer discretionary, because inflation is very bad for any for
Mhm.
people's wallets and spending because they're spending more money in groceries, they're spending more money in gas, they're spending more money on energy, right, housing, electricity, and so on, and that means that they'll have less discretionary income to purchase. So from a macro view, very bearish on consumer discretionary goods.
Mhm.
So retail and all that, apparel could be hit, I think, hard because it's again demand destruction is what happens when oil prices go up, and we also are looking at a yield curve inversion. The 3 year and the 10 year could invert, and that normally always almost is a very good signal for a recession in the future. So a lot of
Mhm.
people are kind of crowding into the bond market looking for safety. So I think that financials should do well because when rates rise, finance and banks will do well because they're going to loan out more money. Real estate looks still pretty strong. I'm still surprised how strong real estate has been doing. And then growth stocks, I think, are just going to have a lot of short covering. They'll rally, but I think there's still a lot of multiple compression because I think because of the demand destruction, and you see like DocuSign, you see a lot of really like Adobe earnings is coming up actually, so that's going to be a really good barometer of how well these high tech companies are doing. But you can see that a lot more of the darlings are
Mhm.
forecasting lower guidance. They're not doing as strong as on earnings. Their earnings are starting to you're starting to see their earnings not be as strong as we saw back in 2020, 2021. So what that means is like each domino is starting to fall one by one, right? Like like Bill.com is doing really well, but what if their next earnings they forecast a lower guidance? Who knows, right? There's a lot of companies that are still doing well, but there's a lot. It's getting narrower. The leadership is getting much more narrower. If you
Mhm.
notice, like Shopify took a huge hit. So many companies have reported earnings, and so far, only a few of the leaders have been doing well. And I think that's a sign of things to come. Eventually, the rest of the companies will, like Snowflake, for example, although they had a really good earnings, honestly, they're priced too high, and they didn't meet the expectations of their valuation. So it'll be interesting to see, what's going to happen once the next earnings seasons come. So what I forecast, again, it's always about April OPEX. It's always about
Mhm.
operation expiration, which is coming in April. It's about the earnings season, which is going to start up again. So I think we're going to rally into OPEX and earnings season, and then people will start taking profit and just go risk off because they don't want to deal with the huge declines that we see from a lot of these earnings. A lot of these earnings at post earnings, and a lot of the earnings get faded, right? Any
Yeah.
earnings that did really well just got faded. So I think it's gonna be a lot of risk off once we get the next cycle of earnings, and then towards April OPEX. So I think we should top out about 4,700 for SPY. Just looking at order flow and all that, I think that 4,700 is a key profit taking area and really strong resistance. So I think that the market should probably rally back to around that range and try to retest the highs or get close to it, and then we should start taking some risks off.
So you think that we can even rally to 47, not make a lower high, like 45, 45, 40, 4,600, which is just a few notches away from now. Like maybe just a day and then we get rejected yet again.
Yeah, because the narrative right now, the Fed, I looked into those comments, and Powell is
Mm-hmm.
emphasizing that the economy is strong. So they're
Mm-hmm.
gonna they're gonna milk that for the time being
Okay.
until indicators tell us it's not, because the jobs report was pretty good, right? A lot of
Mm-hmm.
indicators are showing that Powell might be right, but we know what happened 2020. I typed this in my chat, but 2020, what did Powell say? V-shaped recovery didn't happen, but we did rally. We did rally really hard, right? After
Okay.
Powell talked about that in 2021, what did he talk about? Inflation is transitory, and we rallied from there too. And what happened now? We just corrected, and now he's saying the economy is strong. So you know how this story is going to play out. It's not going to be strong. A lot of data is going to show that the economy is struggling, and then that's going to get priced in, and then the Fed then they have to backtrack and then go dovish again, and then that's going to cause another rally. So I think that we are in a bear market. We corrected. We were officially corrected just 2 weeks ago or a week ago or so. All the indexes are in correction territory.
Mm-hmm.
So any rallies I think are to be sold going forward. So I will definitely go short pretty hard once SPY
Mm-hmm.
hits 4,700. That's kind of my game plan.
Are you one of the few people who would short Chinese names? Say, example, DD, in case DD rallies another 30 or 40%. So last week was a blockbuster week with Chinese stocks. Obviously, that was a short covering rally. We're seeing stocks like DD rally from $1.65 to as high as the previous resistance of about $5. A few more days, it could even go 6 or 7. Are you one of those looking to short China just in case it rallies there? or are you just
Yeah,
avoiding it altogether?
yeah, I'm voting altogether. I know I
Mhm.
was talking about China being more dovish because the central bank was already signaling that they are going to, um, keep rates low and
Mhm.
try to support the economy since growth is slowing in China. And if I went long then, I would be killed right now because it dropped so much more than that. And then there was a lot of issues with delisting, and then
Mhm.
Ukraine, Russia sanctioned, and China kind of helping Russia, supposedly,
Yeah.
right? There's a lot of like talk about that, and China
Mhm.
is not really condemning or voting against Russia in the
Mhm.
UN and so on. They're not really sanctioning Russia either, but they're not going to join in the sanctions. So it's been very honestly volatile. So I think for that reason, I just stay out of it and don't
You
touch
stay
it.
out.
But for
Okay.
people who did capture that move, I mean, a lot of these Chinese stocks went 100%. Like it's
More than
crazy.
for
Like yeah,
others.
more
Yeah.
than yeah, because the government came out and said, and I didn't follow Chinese news, but the government basically came out and said, hey, we're going to support the markets. We're not going to delist. We're going to support the ADRs and so on. They made all these commitments to the market, and then all the money in the short, the people who short the stocks had to cover
The
pretty
cover
hardcore.
funds.
So I
Yes.
guess that was a play in the news event, and honestly, I missed it because it jumped that first day, then people sold a little bit, and then once the
It
news was
further.
verified, it then resumed its upward trend, and those are
Mhm.
some awesome moves. So congratulations to whoever caught it.
Yeah. I actually I think that these types of moves will get retested on the way low. So perhaps the biggest opportunity for this week for Chinese names is to wait for where the rejection comes, especially since most of these Chinese entities have the same problems as the US counterparts. So for instance, last week, stocks like NIO, Xpeng, Li Auto, which we personally think will have a fundamental production problem, as was the case on Lucid, on Rivian, on even the likes of Tesla are having these production supply chain problems. It's either of the two things. Either there's a supply chain problem, which has been existing in Xpeng and Neo for last year, which just got exacerbated this year. I don't think that has really changed. My view is that the Chinese electric vehicles as a whole are still in trouble because unlike Tesla, who probably has secured a lot of the lithium and the batteries, some of them might not have predicted as much demand that it's impossible for them to have stock up so much inventory, and they either have two costs, higher nickel and higher lithium, so most of their battery problems, and then they're gonna be out with so much competition. I believe there's at least 30 or
Mm-hmm.
50 competitions in China alone, and of course, you've got Europe and the US. I think electric vehicles are such a competitive market, and you just have too much players and too little margin to speak of once you've got high inflation on every commodity production raw
Yeah,
material.
nickel is huge, like you said.
Yeah,
That's an issue.
so
And Tesla
so
raised their prices
that's
by
the
thousands of
problem.
dollars on their cars.
Yeah, Tesla has
So
pricing power to raise the price, but if the likes of Xpeng or Polestar or Geely Auto, I mean, a lot of these Chinese cars have been price sensitive buyers. So I think like these Chinese cars are quite a good short next week or this week when we see actually the rallies of about 30 to 50%. So I'm sharing the screen on Xpeng right now. You can clearly see that Xpeng went IPO at about $16, rallied to as high as 60 like most SPACs and high growth stocks. And then generally, unlike the other SPACs, it fell 80% from its highs. This is still managing to remain above 16, rallied straight to 28 last week. But I think that if a 100% rally were to pursue in just a few weeks, either the people who got in would to close their profits, or new people would short. So I think like Xpeng has a great short opportunity at 34. You've got a lot of fundamentals against them, and the technicals are actually with the aligned with most of these sentiment bears. So I think Xpeng is a good short. Even Neo. Been seeing the news on most of these Chinese stocks lately. Tesla is still number one. uh, Actually, it's Tesla and GM's Wuling Auto, but but the pricing of Wuling is the only reason why it's been selling well. So actually the bigger problem is Neo, because since last year, most of the Chinese consumers were already not buying Neo, and it's just being pumped as like the Tesla version of China. So it was amazing that Li Auto, which was doing family cars, was selling better than Neo and Xpeng. So who would have thought that most Chinese people are more into family cars rather than sports cars and sedans? So the mass market is not really functioning they're not responding. I saw the consumer data. Most of the data were just buying family cars. So mostly Li Auto or the cheap cars or a Tesla. So Tesla is like top five of China, and most likely top one on the rest, like Europe. So even Tesla, I have a question. Do you think Tesla can even break $1,000 with all these impending production potential inflation? Would people pay up?
Yeah, I think from a macro perspective, Tesla's the winner, not only
Mhm.
because they have pricing power and their consumers are they have a huge following. It's also
Elastic.
because of the oil and the decoupling from Russia.
Mhm.
A lot of
Okay.
countries are investing heavily into energy
Mm-hmm.
um, transformation, right? They want to be completely self-sufficient or not relying on Russia or fossil fuels by like 2030. And Tesla is it's probably the best company when it comes to solar and EV. They
Mm-hmm.
operate a solar company that installs, solar energy batteries and all that.
Yeah.
So I think the winners here are Tesla and Enphase. I think those are the two I would go long, honestly. Enphase looks like it wants to revisit $200,
Mm-hmm.
and they had a really strong earnings. Their earnings have not been weak at all.
Yeah.
They've continue to show demand for their products, and I think that Enphase, their 20-day moving average just recently crossed over
Mm-hmm.
their 100-day moving average. So that's a bullish
Yeah.
crossing signal. So I think those two energy companies will do well because all these companies, like, they want to get off oil, and they're
Yeah.
investing and very, very serious about converting to more clean energy and energy alternatives than oil. So that's why I think it's bullish. And the other
Okay.
thing from a macro perspective is DIX is the highest it's been ever,
Mm-hmm.
based on the chart. If you guys go to squeezemetrics.com,
What's the name?
it's
Six
squeezemetrics.com, just squeezemetrics, one
Squeeze
word,
metrics.
.com.
Okay.
Yeah, and you look at the dark index, it's at 54.7%. That's the highest we've seen since 2011. So go to gamma exposure, GX. So
Okay.
or dark index is fine. And
Uh-huh.
then click on DIX,
Okay.
and you
The
can
DIX is the blue line. It's very high.
yeah,
What
yeah,
is
look
this?
at
54%.
54.7%, and hit click max for 2 years. You can see it's never been this high before.
Uh-huh.
So that's normally a
So
bullish
that's the
indicator.
squeeze.
That's dark pool. Yeah, when dark pool is more active, it normally signals bullish. So if you look at the times when we crash or COVID crash, dark pool is very low. If you go to 2 years, you can kind of zoom in for the audience. But you notice when the green line is low, dark pool is low, right? You can see the COVID crash, dark pool,
Let me see
dropped. Yeah,
March.
COVID.
Sorry, I
Yeah,
couldn't. I need to go max to see it.
yeah, max, and go to like COVID crash or when it's low.
2020
Yeah,
here.
so so you can see when the
24,
March
2020.
crash, yeah, Dix is lower. Dix goes below 40%, right?
40%.
And when it's
Yeah.
bullish, you can see after the crash, you can see that huge Dix level, right? They're all over
Yeah.
50%,
It was
huge
hitting
Dix. That's pretty funny.
50% around June.
Yeah, so that's bullish,
We went
So,
overbought as well.
and you can
What
see
does
what's
this
happening
dark index
here.
mean? Uh-huh.
Recently, the dark index has been over 50% recently, so that's why I think we're gonna rally because
Uh,
I don't know what the market's trying to price in, but maybe they expect the Fed, because if you look at all the central banks are being
mhm.
dovish because of the war.
Yeah.
The European Central Bank, they're printing more money. The Fed
Yeah.
is buying and adding. Their balance sheet is growing, not declining yet. So until that changes, we're money's going to flow into the market, I feel. So it's going to be very interesting to see what that means when the DIX is this high, because Friday's closing DIX price was the highest it's been since 2011. So that's pretty surprising to me, and I don't really know what that means, because DIX was high for the previous few weeks and we did kind of decline. So I don't know if does that mean it doesn't really tell you if it's selling or buying, but usually a high dark index is bullish in general. So
Do you think a decoupling is necessary from some sectors? For instance, we've seen before the strength of reopening stocks, despite the fact that oil prices were rising, because everyone is really betting on travel remaining. And we've seen the likes of Expedia, Marriott. Well, I understand you mentioned about your bearishness in consumer discretionary. Do you believe that if you are bearish on consumer discretionary, you are a disbeliever of this rally on Airbnb, for instance?
yeah, I
Mhm.
wouldn't play the reopening trade because oil prices, that's going to
Because
hurt
of oil.
airline. That's such a huge
Uh-huh.
cost for flights.
Uh-huh.
And that's going to impact the travel and tourism industry when oil, the cost of oil is like, $100+
Mhm.
a barrel. I think oil might go back to $140 a barrel,
Mhm.
because we're not really resolving the issues. I mean, Saudi Arabia might increase supply. Hopefully, EU reached a deal with the Saudi government, so that might help. But that depends on how oil does. Like, I wouldn't touch consumer discretionary or travel or leisure stocks until oil like starts
Until
to
oil
decline. Yeah,
stabilizes.
yeah. It's just
Okay.
it's demand destruction. The price of oil rising that much, it destroys demand, because oil
Mhm.
is such a huge input cost for everything, our house, our cars, energy. There's so many things that people use oil for. And then number two is inflation. We have inflation on top of that, so that's even more demand destruction. So less money will be spent on the discretionary things, that people want to, if they have a lot more money to spend, then they'll go traveling and do all this stuff. But if they don't, because of high oil prices and inflation, it's going to be the opposite.
How long do you think we will be in this trading range? Like, if this were a buy low, sell high range, do you think this will be until the year end, or will it be longer than a year? Because these problems are, it could shift into a bigger recession, or it could be contained into just a few sectors. Are you of the view that if this were a global recession, that it could last for more than a year, say 2023?
Yeah, I think it depends on the central banks. So there's two questions: is how much worse is inflation going to get? Because we saw the Fed, they basically estimated 2.2%, and guess what? It's over 4%. So they completely missed the boat on inflation. So if inflation starts running away, that's going to be a very big problem, and the central banks will all have to tighten to address it. So it really depends on how much more can the central banks be accommodative, because of the war and everything that's happening. And you think about, Ukraine has 40 million people, Russia has
Mhm.
150 million. There's a lot
Mhm.
of demand destruction there already. Like, a lot of companies, percentage, like Apple and all these big companies, like 1, 2, 3% of the revenue is in Russia and Ukraine, and all that demand is gone. So next earnings, good luck. So
Okay.
I think that the coming earnings it's gonna be basically, once we start to see deteriorating earnings, then we're gonna really enter a full bear market. But before we do, the Fed is gonna act. The central banks are gonna act. They're gonna start pumping more money. They're gonna throw more. They're gonna print more money to stop the economy from slowing down too fast. And because they do that, they're gonna cause inflation to then run rampant, and then once inflation hits, instead of 4% but now 8%, because the way inflation works is it's gradual, and then it just takes off, right? Once we hit 8%, the Fed has to address it. There's no way they're not going to do anything about it. Right now, they're being more dovish, and they're saying they're going to rate hike, because they're it's called job owning. They want to basically, say that they're going to be addressing inflation, and hopefully that job owning is going to result in inflation expectations decreasing, because expectations on inflation also play a huge role, because people will bet on the futures contracts and stuff for oil and all these commodities, and if they expect inflation to be a big deal, then that's going to automatically get priced into the futures. So a lot of it depends. But I think this year is probably going to be overall bearish because of the geopolitical issues. And you never know what's going to happen with China and Taiwan, right? China has mentioned Taiwan already. They're starting to make moves into the airspace. And remember last time I talked about Russia, Ukraine, we were like, oh, we can't plan for it. And look what happened to the market, right? It caused the market to make a new
we were
low.
saying that was always a black swan. The war was going to be a black swan, and it did happen, which triggered all the stocks to fall. Yeah, I think it was T who kept mentioning about the war since December, and it truly
Yes.
found out. And you
Yeah,
mentioned
so
about
it's
the growth stocks getting killed to $40, $50, and ARK did hit 52.
yeah,
Speaking,
I said Arsenal hit
do you think that
60.
was
It went
fast?
below. I said Bob was gonna hit 100 and
It,
and it went to
it, it hit
70.
75. Yeah.
Yeah, oh my
So
gosh, I should have
most of
stayed
your
short.
bearish predictions were correct. I just think that people were very bearish early November and December because of the Fed. And do you think that this quarter, because their bearishness was overachieved with the fact that they didn't predict the geopolitical risks, but it happened. Not everyone did expect about this Russian invasion of Ukraine. I think some did, but majority didn't really take an
Hmm.
invasion seriously. They thought it was just gonna be exacerbating crisis, but not to the point of an all-out World War III, or even a nuclear war. An existential risk. Because of the fact that most people didn't predict that much risk on the first quarter, do you think that it's possible that we could have fallen in 3 months what should have transpired in 6 months or a year? So, for
Happened
instance,
faster, yeah.
despite the fact that the world is continuing to be bearish, I think the other bull side, the bull case, is saying that, well, when Alibaba hit 75, and when the entire world was really thinking that all the Chinese stocks were going to get delisted and basically priced to zero, it is not likely that Chinese stocks would recover. But at the same time, the lows we've seen March 15 could have been the actual low for Chinese names, at least for China. And it actually precipitated this entire market covering rally to reassess whether were Cathy Wood growth stocks like Teladoc really deserving to trade at 50 in the first place. Because we saw like even the Chinese stocks and Cathy Wood growth stocks capitulate, in my view, exacerbating an already depressed and very bad sentiment stock. Like, because Cathy Wood's stocks were falling since Feb 2021. So that's more than a year already. If we're still gonna berate Cathy Wood that she's not picking the right stocks for the economy or for inflation, how much lower could it still fall? I mean, there's a case to say that perhaps ARC at 50 could have been the bottom. It might not rally to $100, but it could just trade within 20-30%. Like Shopify, do you believe it's deserves to trade at $400 or $500? I mean, yes, it rallied 50% at least 40%, 500 to 700. But the Shopify really trade below where does it trade now? Let me see.
It's at
I think like
780. It went from
it's trading at
it went from
from
500
500, right?
basically. It
Yeah,
basically, yeah,
it's
everything
probably been
retested the
Mhm.
2018 peak. So a lot of
Mhm.
stocks retested 2018 peak.
Mm.
Not Coupang, but
Right.
Coop Software.
Hoop
They went
software.
below their COVID. They went below
Mm.
their COVID crash price.
Yeah.
So that's just and their earnings weren't bad. They
Whoa.
just had slower earnings and they guided lower, and they still are making almost 100% more money than they were at COVID crash. So
Yeah.
that tells you valuations don't matter if you're in the bear market. Okay, it's like a bull
Mhm.
market. When we were all celebrating back in February and stuff, everyone was like sharing screenshots of their
Any
gains.
stock could just go up, right?
Valuations
Yes.
didn't matter back then too, right? So now we're
Right.
having the
Right.
opposite trend, and I don't
Mhm.
think that's going to change anytime soon. And this is just a signal. Like we're seeing more lows than net highs, and I shared this in my quick trades chat, and
Yes.
that's why I
Mhm.
was like bearish overall. It's because we're still
Yes.
making more net lows and net highs. That's a bear market. A
Mhm.
bull market
Okay.
fundamentally will make more net highs and net lows, and we saw that 2020, 2021. We kept making net highs over net lows, but now the past few months have been net lows, exceeding
We're
net
not
highs. So
so
that's important to keep in mind.
we're gonna have to be in a bear market mode for at least a year, despite the fact that some stocks may have overshot simply because the overall macro has not really changed. Basically, that's your view. I would agree with your clean energy stock picks like Enphase, and seeing that most of the clean energy stocks were rising. Are you of the view that aside from solar, are you also a bull on nuclear? I mean, have you been looking on uranium stocks as well and commodities?
Yeah, I haven't been following uranium stocks. I know Ty has been, and he's been doing a
Yeah.
good job. But uranium, I'm bullish on uranium. My brother actually played uranium already, and he's been
Uh-huh.
absolutely right because like Belgium and other countries are extending their nuclear power plans
Mhm.
for another decade, another 10 years, for example,
Uh-huh.
into 2030 and beyond. Because that's the only way you can get off oil is you have to. Nuclear is the transition power to from oil to nuclear to clean energy. So a lot of European countries are starting to, um,
Accelerate their
extend,
nuclear
yeah,
plant.
extend or accelerate their nuclear plans and not decommission the nuclear, not
Yeah.
stick to their original nuclear target. So that's bullish for uranium, because that's the only solution right now, honestly,
Mhm.
because clean
Agree.
energy doesn't have the capacity to address the shortfall in oil, that the economies are dependent on.
Just wondering, are you bullish still on cloud names, specifically those cybersecurity, or are you thinking that a recession can actually re-rate their valuations to a lower level, just like what happened to Kathy Wood's growth stocks? So you mentioned a while ago your bearishness on Snowflake. Does it extend to the likes of CrowdStrike, Sentinel One, Palo Alto Networks, the entire cybersecurity hack group? What
Yeah,
do
I
you
mean, CrowdStrike's earnings were pretty solid. They're not really
think
showing any substantial slow
slow down?
growth. But I don't remember the exact number, but I do know it's a decrease. Like their earnings were not as strong as their earnings were back in 2021.
Mhm.
So again, they're already at high multiples. So the worry is once they start guiding below, like their guidance drops, like DocuSign's guidance dropped, then
It falls
the
yet again.
multiple instantly going to reprice the multiple, and you can see like even Palantir and so on. Like Palantir was at a very high multiple. They had a pretty decent earnings, and their stock went below 10, right? So again, it's really risky. You have to really it's a leap of faith to hold during earnings.
Uh-huh.
And I would say that cybersecurities are no different, because we are starting to see a slowdown because the economies are reopening. COVID is no longer is endemic now. It's if a country is highly vaccinated, it's actually a lower fatality rate than the flu.
Mhm.
Surprisingly, that shows the power of the human vaccines that we've created. And then also there's also the China risk. Uh,
Yeah.
COVID is their vaccine's bad, and COVID, if it gets out of control in China, that's going to be another like demand destruction. It's going to really hamper supply, which causes prices to go up again, and it's going to hurt demand. And the one last thing I want to mention is geopolitical. This is always like a human tendency when we start entering recession or growth starts to slow down. The politics of a nation looks outward to create an enemy so that they can pacify their audience at home. And this
Mhm.
happens. This caused all the major wars. They look outward because they want to target someone outside. And Putin is a perfect example. If you look at what he did to really gain a lot of Russians love Putin because he won the war in Chechnya, Syria. He's won a lot of these little mini wars and operations that he's done, and that's what made him popular because the
Mhm.
Russian nation believes he's a strategic commander, and he's a leader that Russia needs. And he made a big gamble on Ukraine, thinking that they can take out Ukraine quickly and he can get another win because he's actually losing popularity in his country.
Mhm.
And elections are coming up. Guess what? Elections are coming up in for another superpower, China. So President Xi is actually losing popularity within his circle and his whole Politburo Communist Party. And his elections are coming up too. So these are geopolitical things that we just need to be cautious of, and that's why overall I think the risk is still to the downside. We will
Uh-huh.
get a rally because of the printing of
Massive.
money and
Mhm.
accommodative, but if we reached 4,700 or try to retest all time highs, and I'm going to definitely go net short to make sure that I'm protected and hedged.
Okay. So I get I get the part that most of the charts are actually just a dead cat bounce, because the macroeconomy still hasn't been really fixed, and it really takes a while for these things to sort itself out. So you're looking to, is there any particular hedge? So you short usually using the Nasdaq or ETFs like the QQQs?
Yeah, the indexes are the best because their implied volatility is the lowest. So if you
Uh,
try to short like Palantir or any other companies that are really popular,
it's too
their
liquid.
implied volatilities are like 100% to like 200%. And that's really risky because if volatility changes, then you could really get hit by the implied volatility because that affects how your options are priced. So the indexes are just the best way to. It's also very liquid, so it's much easier.
Yeah.
The bid ask spread is very close. You'd never want to like, for example, I played Chipotle and lost
Mhm.
a good ton of money because
Uh-huh.
Chipotle's bid ask spread was $6 to $12. Don't ever try to do that. I started bidding and then
Yeah.
people start selling me $9 and I was like, oh, I'm getting a deal because like the ask is 12, but the bid
Uh-huh.
is 6. So and then it's very illiquid because not many people play contracts on Chipotle. So
Uh-huh.
Apple, Tesla, the indexes are all very
Only
good
the
because
large liquid
they're very
names.
liquid. Yeah, they have millions and millions of trades every day. So I'll be careful unless you feel like a DD or some company's gonna drop significantly, then it's okay to go short because you're gonna be on the winning side of that trade regardless. So that's something that I would think about the indexes like for China too, unless you want to pick companies that you think will go down or go up.
Mhm.
And another thing too, China actually forecasted their lowest GDP growth target in more than 3 decades. So the
Mhm.
overall arcing macro theme that I want everyone to remember, because I remember back when I talked in like after February, I mentioned on the stream that hey guys, we're losing liquidity, like liquidity is being removed from the system. So
Yeah.
that means that we're no longer going to be, very very bullish. So what's happening now is GDP growth is starting to slow across all the countries. And the war doesn't help with that. Inflation doesn't help with that. So what that means is fears of recession might be the narrative now. Inflation was the narrative, and now it's going to be about recession. So what that means is we're probably going to rally, go sideways. The central banks will be dovish. They're going to accommodate the markets, like China did, for example, and print more money to support more economic growth. And we're going to rally again. And then once the market realize, and this is probably the late end of this year or early next year, 2023, is the markets will realize that oh my god, the central banks can't do anything. They no longer can help the economy get out of a recession. And that's when we really enter a big bear market, like 2008 type of bear market, because the
Or
Fed
like
can't do anything.
2003. Some people are actually they've mostly made the similarities with the Nasdaq bubble. So instead of the GFC, most of the people are comparing what just happened in the Nasdaq 1999 to 2000 bubble
Yeah,
and the ensuing 3-year liquid bear market. So
it's
actually, the
following closely
2008
too,
crisis,
the chart.
yeah, I think most people have followed the 1999 to 2000 Nasdaq bubble rather than the GFC 2008 crisis, mostly because most of the tech stocks are the ones that went 10x. It was the growth stocks, it was the unprofitable names. So they just similarly substituted the dot com bubble with the SPAC bubble. And we've seen how SPACs deflated. And we've also seen the same with electric vehicles stocks. A lot of clean energy names also, which were quite unprofitable. So I think, like, in general, um, it took 3 years for the Nasdaq, and then it was just really a 3-year bear market where I guess there was no volatility, unlike nowadays where there's huge trading ranges, which is worse because I think that was the time that even Amazon fell 90% from its peak. So and I think even Jeff Bezos was buying during that time, and he was surprised that his sales was so strong over the last 3 years, growing. The company was growing, but the stock market was barely noticing, or perhaps due to the sentiment, nobody really cared.
Exactly. That's what I mean
Yeah.
by values don't matter
And, and
in a
yeah,
bear bull market.
and that was a 3 year bear market for Amazon, and it was the same thing actually when Bitcoin fell around 2018 to 2019. If you recall, when $20,000 Bitcoin fell to as low as $3,000 to $4,000, $5,000 prior to the March 2020 actual low. What happened was 2 years on, institutions were still piling up on Bitcoin. So a lot of blockchain and dApps were actually developing. But those 2 years were called winter years for crypto simply because of lack of liquidity. It only
Yep.
got in when the Fed started printing money, and people were so concerned with with inflation due to the money printer, not really about oil prices. So it's funny that to begin with, the Fed and the stock market rose because of the apparent inflation that a lot of crypto people were discussing, but not related to oil prices, but simply because you printed money, so therefore assets in a way would go up. This is what Ray Dalio always talked about. That's why he hedged through stocks. He mentioned about cash being trash. I wonder if the reason why real estate continues to go up is because it is an asset class similar to gold. And even Elon Musk actually mentioned once in a tweet, Elon was saying inflation is sky high. They had to raise prices with Tesla. And he's saying on his tweets that, you know, the only things that can hedge you on an inflationary environment are really assets. So most people's hard assets are still real estate, and then of course some paper assets like stocks and some crypto. So a lot of people were, I mean, in my view, I don't know if we are in a perennial high inflationary environment for the next 3 years, that people learned that they just are better off holding some Tesla, no matter how expensive it may be. That's why we're seeing, I think, Tesla just trade within ranges. So, and not an entirely bear market. And we're not really seeing a bear market in real estate prices. Um, I've been checking out some REITs, and people were mentioning to me how REITs were generally becoming like safe haven assets as a whole.
Yeah, because supply and demand, there's just not enough housing. There's a lot more demand for housing than supply, especially in the U.S. Like Vegas and Austin, for example, are the hottest real estate markets. Austin doesn't have enough. Um, they're not keeping up with the demand of housing there. So I think that's why housing will do well until supply is able to catch up. So for the time
Oh,
being, that's
so
another thing too that signals a
home
recession
builders,
is
right?
the housing market needs to weaken for us to really go into recession, because housing is majority of wealth for
Household.
Americans and a lot
Yeah.
of people across the world. So if your house starts losing value like 20-30%, then guess what? You're not going to spend money. You're gonna hunker down, and you're not going to spend money, and that's going to cause a recession. So that is the true kind of signal of a recession, is once the housing market starts to weaken and starts turning into a bear market, and housing prices start to decline, and people are selling for below bid, right? Because right now all the houses are still being sold above ask.
Mhm.
So I don't think we'll enter a full blown recession until that turns
Uh,
around.
until like that asset class explodes, because I think what really happened during the tech bubble was that it was contained, as people knew, it was a Nasdaq tech bubble, and it wasn't the same as GFC where housing prices collapsed. I also remember that during that bubble of year 1999 to 2000 or 2003, a lot of other companies were able to stay strong. So it was really like not an entire world collapsing. It's possible that if this were a recession, you do have asset classes like real estate generally strong, and that could be the reason why KBH. So I took a look at like some home builder stocks. KBH is still trading quite higher than the rest. It's at the very least maintaining, right? And you've got the likes of Lennar quite high, home builders. maybe indeed there's a sector that's quite strong. I'm actually surprised of the strength of Berkshire. Why do you think Berkshire continues to hit all-time highs despite the fact that Berkshire has a lot of Apple? I mean, Berkshire today is trading at all-time highs. Do you believe that this is something to do with just a safe haven play, despite the fact that McDonald's, Coca-Cola, a lot of these are also asset classes that have inflationary headwinds with them, right? Are you
Yeah, I
surprised
think it's
with
because
the Berkshire?
they're just cash generating, right? They
Mhm.
hold all of the stocks that have a lot of um, um, dividend, and also they're not volatile. So they hold Johnson and Johnson, Procter and Gamble. These aren't very volatile stocks. Apple is not actually volatile. Apple
Yeah,
doesn't move like
it's
20. If
just
it
in
did,
a
that would be
sideways
horrible.
range.
Yeah, and Oxy, right? He's also an oil company, Chevron, Oxy. He actually increased his stake
Mhm.
into Oxy. Has a lot of banks. Like it's actually
Mhm.
the perfect hedge. It makes complete sense. You look at what they're holding: Visa, Mastercard, which all reported very strong earnings. Like consumer spending is still strong.
Mhm.
Right? If you look at, he has a lot of um, Apple is one of his bigger holdings, of course, but there's a lot of, like, it's pretty well diversified, and these are companies that will probably be able to do well even in low growth times. So, and they're going to continue to give good dividends, like Kraft Heinz.
Yeah.
People are not going to stop buying ketchup. So Coca
So, are you
Cola, and so on.
of the view that Berkshire is just gonna go unscathed in a recession? At the
I
very least, Berkshire will just
I
stay
wouldn't say unscathed. I
sideways.
think though their volatility will be low. They're not going to move more than, they're not going to lose half their value. I doubt
Uh
it,
huh.
because of the companies that they're in are going to be able to take advantage. You know, they have Verizon, which people are going to continue to pay their cell phone bills. It's not like, people are going to start canceling, their cell phone bill and so on. All of the companies they have are like companies that are core to the
Dividend
economy
paying
and
companies.
dividend
Okay.
paying companies. So I think that they're not going to be protected, but their volatility would be much lower, and that's what the market's pricing it now. You know, so
Yeah. And the outperformance of Berkshire actually is amazing in a year like this where there's just too much volatility. Berkshire is up almost 15% already for the year, almost like from about 297 to 342. So it's an amazing feat in
wow,
in
yeah,
a year like now, because to make 15% on Berkshire Hathaway in a quarter, where the S&P and the Nasdaq are suffering, that is pure outperformance the way I see it. People might be just parking into Berkshire, and I was surprised because Berkshire doesn't have a lot of gold or commodities. It doesn't have nickel miners. It doesn't own much of that. And I look at the contents. Apple, I mean, the rest are sideways. They're not really strong. They're not weak, but they're just sideways. So I was actually a little bit thinking that there's just a premium paid on Berkshire, either due to the cash it holds, which is also possible. He could be acquiring companies at the cheap for this year, and people might be pricing in that there's a potential acquisition. Speaking
I
of
guess
health companies,
billions.
um,
Okay,
yeah, they've got like more than 100 billion, and they could just unload Apple in a day if they have to. So I mean, they're pretty much loaded with cash. Do you think that there is an interesting company for Berkshire to buy? Would there be a company that would pass Buffett's test? Because Meta Platforms has gone down half, Netflix has gone down by half. Um, is there any company, do you think, that which is quite large, that a company like Berkshire Hathaway or even the other billionaires, because we've seen how Bill Ackman already triggered a buy on Netflix at current levels of about $350 for Netflix. Do you feel that some other billionaires will try to give a buy already on Facebook? I mean, it already have for what, for just a few quarters. um, do you have any view on Meta platforms or any metaverse name, or do you
yeah, I
think
don't think
there's still
so.
further downside on Zucks?
Yeah, they'll probably avoid tech
Mm-hmm.
stocks that are more speculative. So Facebook is now trading at very low PEs, but
Mm-hmm.
they're more speculative because they're trying to sell a pipe dream of the metaverse, and that has not materialized. And Mark Zuckerberg is basically telling investors that, hey, just wait another 10 years and I'll deliver on the metaverse,
Uh,
which people also
which
bet against
doesn't
him
sound
before,
right in the
which
short term.
yeah, but he's been right again. Like Instagram, everyone questioned his purchase of Instagram. Everyone questioned WhatsApp, and
Mhm.
people will question Facebook, right? And guess what happened 5, 10 years later? It became
And
billion
even
dollar
Reels right now, they're
cash.
questioning
Yeah.
the Facebook
So
Reels on
so I
whether the
think it's
advertising there was right. Go
investors
ahead.
won't change. This is how they act. They're herds. Honestly, they just flock and just follow the herd.
Mhm.
So Facebook will probably continue to suffer, honestly, until we start seeing substantial material revenue growth when it comes to the investments into Oculus and the metaverse. So I doubt that Berkshire would buy that, but I think what they might look at is potentially Zim. So I bought a lot of shares in Zim after their earnings, and I'm up already like
Uh-huh.
10%. But they announced a dividend of $17.
Ah, okay,
So
the
I was like, I'm
shipping.
buying it. Yeah,
Oh,
ZIM.
wow.
They do
Okay.
transport, and they
Uh-huh.
use LNG,
Mhm.
liquid natural gas in their transport. And this is a great company to look into for earnings. And shipping's not going to go anywhere. Like we're still they're growing like double the rate of the market for transportation.
Mhm.
They have solid earnings, lots of cash, and very low price to earnings. And these are kind of companies Buffett loves, is cash generating companies that can give value back to their shareholders via dividends, right?
Yeah.
And a $17 dividend is no joke. I mean, that's insane. Like I was just shocked when they announced a $17 dividend. That just shows how undervalued the company is. So companies like that, Buffett will look at. I think that potentially Adobe could be of interest because Adobe they're priced lower than DocuSign. They have a lot of necessary cloud. I don't think any companies would cancel their Adobe because you need Adobe to run your business. So I think
Mhm.
Adobe might be popular. I don't think Berkshire has Adobe yet, but they will definitely look at companies like that don't have that are very high cash, generate a lot of cash flow, and then it has high dividends. So those are kind of my thoughts around what Buffett would look at because he has T-Mobile too, and
Yeah.
other companies. Activision, they also have Activision, which is
Yeah, they
surprising.
bought a lot of Activision Blizzard for, I think, the cash flows as well. They mentioned that they bought it prior to the earnings and prior to the acquisition. But it wasn't because of the knowledge. Obviously, nobody would admit if they had knowledge of an acquisition. I mean, right now, I think some of the friends of the past CEO were found to have gotten hundreds of millions of dollars of call options in Activision, and some are
There's
getting
an
out for
investigation.
insider
Yeah.
trading. Yeah, there is an SEC investigation. So I guess like it's quite hard when you are able to be right. Either, but I do think that at some point, because Activision Blizzard has been falling because of sexual allegations in the past, um, the people who are being questioned right now by the SEC can get away with it simply because there's really a lot of reasons to own Activision at 50, $60, and they I mean I would say that I could have bought, just not at that amount. I think they just have to understand, did these people buy a huge percentage, and if it was like just less than 10% of their entire account, it would have just been a lucky trade, to be honest, because everyone knew how powerful Activision franchises were. The Microsoft acquisition was just really lucky, I think. Even if Warren Buffett and Bill Gates were quite good friends. But I mean, and in any case, nobody really could say whether it's luck or insider, but nobody really would question Berkshire Hathaway for being right, or the likes of friends of the CEO. Because sometimes it's because of your knowledge in the gaming industry that makes you bullish about it. So I mean, one of the questions I actually was wondering was how low should software stocks go down for the people in cloud names to suddenly just go into an M&A the way that happened with game consolidation, because we've seen how some people are discussing a potential M&A if companies like, I mean, I doubt it that Peloton would be bought by Amazon or Apple. It's very expensive for them. But do you think that an M&A in a recession is also possible? The same thing that happened with game consolidation lately. Because there's like
Yeah, that's the time. Yeah, that's the time too, because
Microsoft
like
just bought Activision.
yeah, they're so cash rich. They have so much cash. Apple has so much cash.
Yeah.
So the time to buy, I think Apple might buy Peloton. Honestly, like seriously,
If it's like
Apple's a
$10
hardware.
for
Apple's a hardware tech company. They have Fitness Plus, and they can extend their ecosystem into Peloton and probably make the Pelotons even cheaper by implementing iPads onto. It's basically an iPad on a treadmill.
I mean, yeah,
So
because it's
um,
Apple.
yeah, so I
Okay,
think that if Peloton gets cheap enough, I have a feeling that Apple could do that, and also Apple might even look at, because they want to be in the EV space. They know EV is probably the next big hardware and tech. The next, because if you look at what's the industries that are generating the most returns. Mobile was a big one because technology, right? It's basically what is going to be more like a computer. And if you look at cars, they're becoming computers, right?
yeah.
And that's why Tesla is worth what it is. What next is going to become the next computer, right? And you look
And
at the
that's
most
why
successful companies.
semiconductors got bought out as well. Speaking of,
Yeah,
all these Chimson lockdowns is spurring a huge supply chain problem on semiconductors. Even the war has a toll on these semiconductors. Do you believe in what AMD and Lisa Su said, that they were inflationary, but they're able to pass it on to clients? How strong do you believe that these claims on semiconductors like Nvidia and AMD could continue to be resilient in the face of all these lockdowns and supply chain problems?
yeah. I bought AMD last week because I think the semiconductors are going to continue to stay bullish no matter what, because
Mm-hmm.
there's just a huge demand for smarter and smarter products, whether it's cars or whatever. Also, you look at cryptocurrency, Web
Phones.
three, the
Yeah.
metaverse, phones, everything needs those semiconductors. I mean, Nvidia had to basically, you know, tell their cryptocurrency, purchasers that, hey, the 360, the 3060 is a new graphics cards they announced, the RTX
Mm-hmm.
3060, which is what I want to buy, but I can't buy it
Uh-huh.
because it's sold out everywhere. And that's
Uh-huh.
because all the cryptocurrency bastards are buying all the graphics cards.
Uh,
You think about, machine learning, AI, you know, all this stuff. You need data centers. You need, like, Facebook is already buying, you know, tens of thousands of NVIDIA GPUs to run their larger data center that will power the metaverse. And semiconductors, like NVIDIA, will be the next $1 trillion company. NVIDIA is going to be like the next Apple,
mhm.
the next FANG company, if it isn't already. And AMD also will be one of those companies because their earnings have not disappointed. If you notice, every earnings that NVIDIA and AMD had, they're just crushing their expectations, and they've been raising guidance every single time the past 8, 10 earnings, and they're still raising guidance on top of that already strong forecast, which to me is insane. And that's why there's not going to be a drop in demand. Even if we have a recession, demand will drop a little bit. But everyone is so into crypto now. Like, once you get into crypto, you don't really get out of it. So there's a
Mhm.
lot more miners. There's just so much demand for everything that Nvidia and AMD
AMD
do.
does.
And from just from a macro perspective, CPUs were the kings, right? Memory and CPUs, like Micron makes memory,
Yes, and Intel.
CPUs, and what is now the biggest thing in computing power is GPUs, right? So
Mhm.
GPUs are the future. And I think the next thing after GPUs would be system on chips or SOCs, which is what Apple is creating, and why NVIDIA tried to buy ARM.
Mhm.
Is the system on a chip is the next big thing, because that's basically miniaturizing the computer into smaller and smaller applications and stuff, like your watch, and so on and so on. So GPUs are the future. There's not going to go anywhere. Like, there's crazy demand for GPUs all the time because gaming population is growing. And guess what? During recession, people game more because it's cheaper to game, to stay at home and play video games, because you're not spending
For
as much money.
entertainment.
So gaming does pretty decently during a recession. It's not recession proof, but it still grows, and people actually, will allocate more time gaming because it's less expensive than going to Disneyland. So that's why I'm bullish on GPUs in general. So Nvidia and AMD are the two best companies when it comes to making GPUs.
So, okay, let me just summarize what we've discussed for an hour now. So, you're bullish or constructive on semiconductors like NVIDIA and AMD. You're bullish on Tesla. You are highly bullish on clean energy sector, specifically Enphase, and you are very bearish on consumer discretionary. You're bearish on travel, leisure, reopening stocks, and you usually would hedge via QQQs or the Nasdaq. So we've been looking on the charts, and I would agree with these analysis as well. AMD continues to really remain very high. It's been bought at $100. Oh, I have to agree that the ones that you've bought, like shipping stocks, they're all at all-time highs.
Yeah,
Zen,
they're doing great.
I was
Yeah.
surprised after seeing all the bulk shipping stocks. Eagle bulk shipping is also trading at all-time highs. So I guess
Yeah, Zim is my
shipping
favorite.
stocks,
ZIM is really good. I have on both
yeah,
my accounts,
shipping stocks
my
seem
long
to
term
be
and short
as
term.
a whole. Um, both I took a look at the ETF of global shipping ETF. I guess the ticker symbol is both. It's been rallying from about the lows of
Oh wow,
20.
I didn't even know that existed. That's awesome. I wish I
No,
went long on that one.
I didn't know any of these until you mentioned about the fact that you bought Zim.
Wow.
So
Oh,
I
look at
just
that
took a look
channel.
right now. Yeah, in general, it seems like all the shipping stocks are going up. So I'll be looking at the shipping stocks because actually the problem of supply chain has also been exacerbated by all these shipping rates. I've been
Yeah,
seeing
war, oil, everything. So these
yeah, I
shipping
mean,
companies, you have to ship stuff.
so
So
there's really like a commodity boom. There's an inflation which is really making people buy. Just like what everyone like Ray Dalio has been saying, it wasn't just the Fed printing money. Now you've got inflation, right? So no matter how tight the Fed really tightens this rate hike to 7 times, the world will definitely not hold the dollars. They'll either go into shipping stocks, commodity stocks, clean energy names that they believe there's value, perhaps semiconductor names. And if they're really bearish in the NASDAQ or in consumer discretionary, I do believe that some people will protect themselves through inverse funds. So the Nasdaq puts do the job, and in some ways, I think the world has already accepted. I mean, it's a bad thing, but they've accepted the risks of all these inflation and even the geopolitics that has happened. So we're gonna be in a tight. We're gonna be in a wide range. I would have to agree with everything you've said. And you've got China problems that would be um, it's gonna be noisy. It's gonna be a noisy environment this year, definitely. So a lot of short covering one of these days, and a lot of selling off as we've seen over the last 3 months, perhaps. I'll take a
yeah,
look at
it's just last thing I want to add with China is the property issue over there. The property market in China
still
is
not
having a lot of
done.
issues.
They
They have
just
an
concluded.
upset US. They have oversupply, and Evergrande just got suspended trading today. Something's happening over there. So we could get a lot of counterparty risk and a lot of people unwinding or derivatives where they're exposed to China real estate. And you could be talking about billions of losses for some banks or whatever funds that are connected to commodities in China. So it's very risky. And long term capital, they over leverage in commodities, and
Mhm.
they literally brought down the market. They
Yeah.
caused the Asia financial they caused the Asia financial crisis back in 1998 was because LTC, long term capital, literally over leveraged like hundreds or I don't know 100x or something fucking nuts, and then
I
it
wa- I
just
was
dominoed.
surprised
So
how they were allowed to also lever. I'm not sure if companies or hedge funds today are still allowed to do after what happened during the. You would think that the banks wouldn't allow these funds to keep those trades to begin with. And then you hear the thing about the nickel prices, and then this billionaire getting killed with billions of dollars of losses. So in some ways, hearing a Bill Huang blow up, and then this nickel trader in China, I think the world
yeah,
never really changed their risk management, nor did they because you would think they would have learned, right? But after a decade, the protocols and banks still allow these trades to still happen. So
Yeah, and
that
that's why we have market
really just,
crashes because the margin
yeah.
has to unwind.
So we'll
That's
just
literally why
have
we have
booms and
crashes.
busts.
They have
Yeah.
to sell to meet their margin calls, and that's why we literally crash. Like that's what happens in
Mhm,
every crash, actually. So
mhm,
we're just waiting for this next crash, and we don't know when that's going to happen. But I'm going to
mhm.
say net short for this year, next year. So
Okay.
I mean,
So
today
your
Evergrande
short
already
cash, short
suspended
cash.
trading on Hong Kong. Like Evergrande suspended its trading on Hong Kong. So what does that mean? I have no idea. I'm gonna look into it and try to figure it out. But that's going to cause some systemic risk
Mhm.
for China's market. So be
It's kind of
interesting. But yeah,
volatility. Yeah. So we'll just wait and see and observe. And thanks again for this chat, Jeff. And see you again next 2 weeks. All right.
yeah. See you
Okay.
guys. Take
Bye.
care.
All
Yeah, bye
right.
bye.
Bye bye. Thanks. Thanks.